Sharon saved her supply chain from cyber risk and ended the office goat debate.
White House here now is supply chain expert Brandon Daniels, who's the CEO of the risk management firm Exiger. Welcome, Brandon. Also, Greg Ip joins us. Greg's the chief economics commentator at the Wall Street Journal, which, of course, is President Trump's favorite newspaper. Particularly, he likes the editorial board there. He was saying something like that earlier. Thank you, Greg. Okay, actually, Greg, let me start with you, not about the Journal's editorials or anything like that, but you've written yourself about how the ultimate goal, you think, for Trump is unclear. Now we do see, at least with Mexico, this pause today that was announced. Does that clear things up at all? How do you feel now?
Well, I think the reason it's unclear is that all along Trump has offered two different motivations for tariffs. One is as a negotiating ploy to get movement from partners on things like drugs, fentanyl, trade deficit, et cetera. But he also talks about wanting like a return to an era when tariffs were permanently higher and a great source of revenue.
Right.
So I think it's still a little bit unclear. So even as he was talking, his own people were saying that Canada and Mexico were making progress on his demands that they do act on the border. He went ahead and imposed the tariffs. And the negotiators themselves from those countries were unclear on exactly what Trump was looking for. And I think that even if we do end up seeing a pause, a delay, or a dialing back of the tariffs he announced on the weekend, everybody knows that he could reimpose them at any minute. And he is still talking about permanently higher tariffs later on. So I think that that's why I say it's a little unclear. What is the end game here? Mm-hmm. Is it temporary tariffs now to achieve this short-term goal? Or is there a world of permanently higher tariffs?
No, I think it's an open question. You're right. I want Brandon get your perspective on that. I'll point out, by the way, the Dow there, which we have on the screen, it was just in the green, now down a little. It was down like 600 points earlier today, but with the Mexico news, comes off those lows. Not a huge reaction, 1 or 2% even earlier. But Brandon, you're the CEO of a company that deals in supply chains. So I would have thought, boy, this is going to be like a lot of CEOs I've interviewed over the years about tariffs. They're going to be anti-tariff, blah, blah, blah. And then I read that you actually think that Trump, in the way he's dealing with this with a quote-unquote hardball strategy, is on point. That, you know, and that surprised me. So to pick up on what Greg is saying about the goals from your perspective and where you think he's right about this.
Yeah, so first, Connell, thank you for having me on. It's good to see you again.
Yep.
So first, in terms of this negotiating strategy, I think there are 4 points, right? And I'm actually going to reverse this versus when we've talked about this in the past. The first is there's an opening salvo for bigger negotiations, right? I don't think this is a bluff. I think Trump is setting terms, and China and Mexico, they're already scrambling to respond. They know they're in a weak economic position. And Xi Jinping and the president of Mexico are looking for ways to come to the table without losing face. And so what we're really looking at from an overall position perspective is that this is a big opening salvo in a big and longer negotiation that is 2 parts. Then I think there are 3 core pieces to this, Connell. Mm-hmm. One, I think Trump wants to deliver on his immigration and crime promises. Trump is turning tariffs into the battering ram against illegal immigration,
right,
narcotic crime.
Which we get, by the way, with Mexico. Canada, I think people are less sure, but continue.
Yeah, well, I mean, he already accomplished this with Colombia, and there are concerns with, especially through Canada, anti-terrorist or anti-terrorism sort of law enforcement not being sufficient, right? And so the incentive to be complacent or exploit our borders goes down. Okay. Then I think we step into the longer term strategy, which has 2 core points. Bring back manufacturing back home where we can be competitive, but with realism. So automation, AI, and robotics have changed the game. Cheap labor is no longer China's trump card. Sorry for the play on words.
Right.
But the U.S. can now compete in key manufacturing sectors because now you're at a place where the only thing that differentiates us is the cost of real estate. And there are places in Texas where it's cheap to manufacture. And then the last point I'll just make is that he's looking to bring back areas of manufacturing where we have to protect our IP, and that's in AI, robotics, and those key areas.
So all strategic goals accomplished by wielding kind of the tariff as a threat, sometimes implementing it, hopefully for a short amount of time. I get it. The larger question was, I think Greg was raising, and I'll play a clip from one of Trump's advisors who definitely thinks this, and I'm not sure 100% how the president thinks about this, is that whether they want to make some sort of a fundamental shift in how we raise revenue in this country. In other words, get away from relying so much on income taxes and rely like we did years and years ago, like in the 1800s, on tariffs. And the advisor I'm alluding to is Peter Navarro. So let me listen to what he had to say and then see if that's what you're getting at, Greg. Here's Navarro.
Tariffs are good for America. Tariffs are tax cuts for America because the tariff revenue that we're going to get over time will be used to get us that tax cut that's going to be negotiated over the next several months.
So again, Navarro definitely thinks this. I'm not 100% sure, Greg, like I said, how the president views it. But is that what you were talking about, and with the lack of clarity?
Well, exactly. So, in fact, the president has talked about that a lot. And now people in Congress, like Jason Smith, chairman of Ways and Means, are talking about tariffs as a permanent new revenue stream. Well, if that's the case, then these tariffs that he announced this week cannot possibly be a temporary thing, right? He is aiming for some world where tariffs on everybody are higher. I don't know whether that means 25% in Mexico and Canada and different numbers for others. I'm not sure.
Right.
But the clear end game seems to be here that whatever the tariffs are today, they're going to be higher. Now, the idea that you can replace all other sources of revenue with tariffs, I think, is a little unrealistic in the sense that you would have to raise tariffs to such a level, like hundreds of percent,
yes,
that imports would essentially collapse and you wouldn't actually collect anything at all. I think Art Laffer made that point many decades ago.
Well, also kind of inconsistent and hard to predict, right? You don't know exactly what you're going to collect. If consumption goes down and people decide to buy less, you might not collect, and at least with income taxes, you would know. And the last point I would make about that is that the working class people would theoretically, in that situation, probably get hit harder as a percentage of their income. But Brandon, you think it's different, it seems. And again, I see your point on that. For example, let me talk, I'll put it up on the tablet about this Mexico deal. We've seen stuff like this before. So see this first screen, that looks a lot like what we saw today with the 10,000 troops deployed, but you see the year, that was 2021 right there. So 900,000 migrants detained last year. So we've seen Mexico make moves like this. And again, Trump kind of put them in a position where they made another move today. I'm not sure what Canada is going to do as their quote-unquote off-ramp. So it's a debate about what the the end game is. How do you see it ending, Brandon?
There's no clean offset for income tax. And I don't think that anyone that's advising Trump is saying there's any clean offset with the external revenue service, with the internal revenue service. It's just not realistic. And we heard numbers coming out of, the administration between 2 and 10% for the last couple of weeks. And we even had this sort of 90-day pause until there was tough talk on immigration. And so, one, I think you will see tariffs, but they're not meant to, they're going to be surgical. They're going to be focused on these key areas, bringing back intellectual property to the United States so that we can manage it and safeguard it. And then two, bringing back manufacturing where we can be competitive because automation has entered into the sector and you no longer have the advantage of labor arbitrage. This isn't a perfect strategy. There's nothing perfect about it. But at the same time, the situation that we're in where we've just become global consumers and then using debt from those same countries to consume more, that's not going to lead to better money supply inside of the United States either. That's not going to consume or change our overall economic position.
All right, Brandon, thank you. And Greg, as always, thank you.